Shares of Intel are climbing pre-market after a third quarter earnings beat. It's Intel's first earnings report since the U.S. government became the company's top shareholder. Here to talk more about Intel's numbers is Matt Bryson, the managing director of equity research at Wedbush. Matt, thanks very much for joining us.
Thank you so much for having me.
What do you think of the numbers today? It looks like it's up about 7% on pre-trading. Surprised by that or expecting it?
I would have thought that people understood that PC and server momentum accelerated in the third quarter, and so would have been expecting numbers to be somewhat better. Having said that, numbers were better, so it makes sense. It's up a bit.
And were the numbers that much better that gives you confidence, or were there signs there that you're still worried about?
In the near term, I think things are good for Intel. And again, it comes down to its core markets, PCs and servers. So PC momentum clearly picked up through Q3. No reason to be worried about that in Q4. Same thing on the server side, right? It seems like AI is now dragging more compute along with it. And so things are better for companies supplying into the server market. And if anything, I think Intel was a bit conservative with their guide, so setting themselves up for a bit better Q4 than they've forecast.
And any downside things you're looking at, though?
Yeah, so when I think about Intel from a valuation perspective, the last time Intel traded at these levels, the company had 50% gross margins. You had a very similar story about things getting better in that you had the CHIPS Act, so you had U.S. government involvement coming. You had Pat Gelsinger being really confident around what the next set of fab products would look like. And, now we're back at those levels, but gross margins are 40% or sub 40 going forward. Revenues are a whole lot lower. And you still have the same uncertainty in the sense that things don't get better for a couple of years. And so, I think in the near term, there's not a whole lot to worry about from an Intel perspective. I worry that 2026 isn't good enough to sustain the current valuation.
What might you be looking for in 2026 then that might get you worried?
I think the most important thing is the rollout of Panther Lake. So that's coming Q1. That's going to tell us what Intel's new process looks like. Their 18A process, they need that to be successful. First of all, to make their own products, but secondly, to start making their foundry business attractive to other customers. And so I think around CES, when we'll probably get a better look at what that product looks like, is probably really, really important for Intel.
And we had the U.S. government now a part owner in it. Has that had an impact, positive or negative, or is it just sitting in the background?
I think that it's been a positive impact in the sense that there is some speculation that you end up with favorable treatment moving forward from the U.S. government. So we still haven't seen Section 232 tariffs. Those have been expected for some time. But I think investors, in the back of their minds, there's got to be some expectation that when those finally appear, that they're going to favor domestic manufacturing and in particular Intel.
And I guess, is that a bad thing from a U.S. point of view? American companies?
I think the concern is that when you favor domestic companies, in particular, if their products aren't quite as good or you hurt the consumer. So if we end up with more tariffs and it hurts the ability of, say, data centers to purchase AI servers and to compete on AI, I mean, that ends up being a bad thing for everyone. If PCs become more expensive, that ends up being a bad thing for everyone. So I don't particularly look favorably upon tariffs, whether or not the impact on Intel is positive or negative, just because of the ramifications for the rest of the U.S. economy and our potential competitive edge in technology.
Okay, Matt, thanks very much for joining us today. We appreciate it.
Thanks.
Matt Bryson, the Managing Director of Equity Research at Wedbush.